You won't see scalping being hard again after this video, because I will show you how simple and effective scalping can be and doesn't need to be complicated. The three super profitable and simple strategies that we are going to talk in this video are the 5-minute opening range, the previous day high and low, and the pre-market high and low. I will first show what our plan is and how to find each of these setups, and then we will jump into the charts and test a couple of trades using these three strategies. So the first one being the 5-minute opening range. On this strategy, we actually trade the 1-minute time frame, despite its name. So what we actually want to do is to wait for the US market open on any stock, preferably a highly liquid, high-cap stock, and we wait for the first 5 minutes to form 5 of 1-minute candles. But keep in mind that we are on the 1-minute chart, and when the 5th candle closes, we mark the swing levels that the range has created. And what we want to do now is wait for the market to break out of this range and then retest the range. On the retest, the common practice is to buy long if the market has broken the upside range and retested it, and to sell short if the market has broken down the range and then retested it. And this is a popular strategy because it's simple and it works. But what I like to do is to wait for a heavy reaction. For example, what I want to see if the market has broken up the range and then retest it, I want to see a very bullish candle to form, and this candle has to close above the last one. And it's only then when I will buy long on the candle closure, with stop loss around below the recent lows, and take profit in such a way to at least have a 1 to 2 risk to reward. And most optimal for the risk seekers is a 1 to 3. I wouldn't go with a higher ratio, and if the market has broken down and retest it, I want to see a very bearish candle to form and close below the last candle, and it's only then when I will place the sell position on the candle closure, with stop loss above the recent highs, and take profit for a 1 to 2 or 1 to 3. And what if the market breaks the range to the upside and then retests it, and the market doesn't form a heavy reactionary movement? Well, you can still get it right with a buy order, and the market can as well respect this uptrend moment and win the trade. But there is a lower chance of doing so, and there is a higher chance that if it did not react, it's very likely that it could just continue to fall down and eventually lose the trade. It's about probabilities and how high quality of a setup do you want. Sometimes can work and sometimes it won't work. It's up to your choice. And when the market falls down, breaks the range, and retest it without a bearish reactionary candle, the same story applies. It can still respect and you might still win the trade, but there are higher chances that the price will keep increasing, and eventually, this will move into the stop loss. So waiting for the reaction might be worth the time and knowledge. You try and see what works best for you. And now, let's test this on a few examples. Now, before getting into the charts, we really need a few criteria to be met. The first one is that we must have an overall trending market in order for these strategies to work, because we need a trading range formed from a swing high to a swing low, and if the market does not trend, but instead it moves sideways, there is not enough volume for our take profit to get hit. The volume will come up at some point, and the market will eventually break out of the consolidation and enter a trending market. But in this case, we can't really know if the consolidation will break to the upside and the market forms an uptrend, or if the market breaks the consolidation to the downside and then it enter a downtrend. So we do not try to predict in what direction the market will turn to, but we will wait for it to create a trend, and only then we can look to apply one of the three strategies we've talked about. And the second very important factor is that these strategies work best on high-cap stocks and futures indices. So we will be trading instruments like Apple, Tesla, NQ, ES. This does not work that well on Forex. For planning the setups on Forex, you can look at my last videos where I talked mostly about FX. This is the ES or the S&P 500 index on the 1-minute chart. This is a couple minutes before the US session open, so I will take a vertical line to mark the exact open of the session. By the way, I have my chart time zone on the UTC. 1430 is equivalent to 9:30 a.m. Eastern Time, which is the US session open. You can adjust it yourself, or you can use a session indicator that marks for you all the trading sessions on the chart automatically. We see a couple bearish candles before the open, and the market has opened here. Now big volume should come into the market. And what we do here is count the first 5 candles, including the session open candle. So there we got the first 5-minute candle is closed. Now we want to mark the high of the range, and we mark the low of the range, and we wait for a breakout. It can break out to the downside, retest the breakout level, and continue the downtrend. Or break up to the upside, retest it, and reverse into an uptrend. We just wait for the market to do its thing, and we just follow its trend. And in this case, we've got the bearish break to the downside. Now what we want to see and wait for is a retest of the zone. Here we got 2 candles bearish retesting with wicks and instantly reversing back down. The next candles also form lower highs. So now that we've got the bearish confirmation candle, we can place a sell short setup on the close of the bearish candle, with the stop loss above the recent highs. And take profit. Here we will look for 1 to 3 since the market has a very bearish sentiment. And the position closes with a win in the next 2 minutes. It's crazy how fast some trades close like that. We do the same thing on the Nasdaq. Also, these two pairs are somewhat correlated, so we might see a similar move. So we start by marking the US session open with a vertical line. This is not necessary. It's only to see very clear the exact candle that opens the session. So again, bearish momentum. And we count up to 5 candles. So this is the first one, second, third, fourth, and the 5th candle. Now that the 5-minute range has been formed, we mark the range high and the range low, and we wait for one side to break. So once again, a downside break. Now we want to look for a retest and a continuation. So the price pushed up towards the broken level and instantly rejected back down with a sequence of 3 very bearish candles. All that we need to do is to follow the momentum, which is, in this case, is bearish, so we sell short at the candle closure. Usually I would have sold short after this first huge bearish candle, but let's say that we are late to the trade since the next candle is formed already, with the stop loss above the recent highs, and take profit at 1 to 3, since this also looks like it's not going to reverse back up pretty soon, and will probably still hold this downtrend action for a while. There is also this kind of support that has held a couple of times, but it's getting exhausted if it has held more than 2 to 3 times, and has a higher probability of breaking it down and not respecting it anymore. So it actually bounced up from the support, but then it failed to continue the uptrend, and instead, it broke it down, essentially continuing to move towards the take profit. And here the position gets closed. Now, this could have been closed with a win earlier if the entry would have been placed on the first large bearish candle. But I've chosen to be more realistic because missing a couple candles can happen sometimes. But the important thing is that you understand the planning of the setup. And let's check the last one before we move into the next strategy. This is the Tesla stock. We mark the US session open. Here again, the market pushes down right before the open. First candle, second candle, third candle, fourth candle, and 5th candle. Now that the first 5-minute range is formed, we mark the high of the range, and we mark the low of the range, and we wait for a breakout on one side. So we got a breakdown below the lows. Here we also got the retest, which is also followed by a bearish reactionary candle. But before that candle, we got a huge wick that has broken into upside into the range, but rejected all the way back down. So we could also use the wick rejection for the reaction. In that case, we would have sold short on the next candle's open, with the stop loss above the recent highs, and take profit below the lows, in such a way to form a 1 to 3 risk to reward. And this closes with a loss. So let's see if it actually breaks to the upside, because if it does, we just move into the next strategy and accept a loss. 2 wins with a 3 ratio and 1 loss still ends up in profit. And if it fails to hold the upside momentum and instead it breaks down again, we can do a similar sell setup once again. And looks like that is what happened here. The price tried to move closer to the high breakout zone, but the move completely faded down and now sits right at the lower breakout zone. There's also a level here that acts somewhat like a support. So what we want to see for a more clear bearish confirmation is a break below the support. Here we got the confirmation. And we can do a sell setup again, right on this candle closure. Stop loss above the recent highs. Take profit at 1 to 3. And this is a larger trade. But it closes as a win here with this wick, recovering the previous loss and also entering into the profit trading Tesla. And let's say that this wick did not close the position because of spread or whatever. Some brokers might have this problem. However, it should not happen on liquid stocks. Now here the position closed for sure this time. The next strategy is the previous day high and previous day low. On this strategy, we start on the daily time frame of a stock, index futures, or whatever you're looking to trade. And we mark the day's high and the day's low. Then we switch into a lower time frame. It can be the 15 minutes chart. It can be the 5 minute or the 1 minute as well, because the time frame is not really that important. What is actually very important is the breakout itself. So on the upcoming day, we wait for the market to break one side of this trading range. This break has to be done on the next day, and it should not be extended into the upcoming days. So what I mean is that if we get to mark these levels, and the market does not break them on the next day from the previous one, we invalidate this setup, and we can repeat the same steps on the next day, so taking the day's high and the day's low after the trading day closes. Then we repeat the same action, so we switch into a lower time frame. And when the market does break out of the trading range, so let's say if it breaks the range to the upside, well, we just applied the same logic as the first strategy. So we are going to look for a retest on the breakout, and we want to see a bullish reaction, moment where we can place the buy setup, with the stop loss below the recent lows, and take profit at 1 to 2, or 1 to 3. So the setup planning is very similar to the first strategy, and if the market breaks down, we look for a retest of the break, and preferably it should print a bearish reaction, moment where we can look for a sell setup, with stop loss above the recent high, take profit at 1 to 2 or 1 to 3, and that's it. Now we are going into the charts to look for this kind of setup. Now this is the Apple stock on the daily chart. We are using the second strategy of previous day high and previous day low, so we are on this specific time frame because it's easier to mark the day's high and the day's low. Then we switch into a much lower time frame, usually on the 1 minute since we are scalping this, and we wait for the market to break out of one level. Here we got an upwards break above the previous day high. Now what we look for is a pullback and continuation to the upside. Now we are retesting the previous day high, and this is the larger bullish candle that reacts after the retest. So the setup planning is similar to the previous setups. Entry on the reactionary candle, stop loss below the recent swing lows, and take profit above the highs. This time, let's try the 1 to 2 risk to reward. It's a more sustainable ratio. The market holds this bullish momentum, and couple minutes later it closes on the take profit, a pretty simple and straightforward setup. One last setup for this strategy. So on the AMD stock on the daily time frame, we mark the last day's high and last day's low. Now we switch into the lower time frame. This is how the price action inside the daily chart would look like, but shown on the 1 minute time frame. We have the highs and lows, and now all we need to do is to wait for the new day to open and break one of these levels. This takes a longer time. You are free to set alarms on the breakouts so you might save some time. And finally we got the breakout, which happened to the downside. We've also had a retest, and now it falls back down again, and looks like it's retesting again. So I will wait to see if a larger bearish candle forms. And it did here. Now it's time to plan the setup and the targets you already know, as I've said multiple times in this video. This one also takes slightly longer, and closed as a win as well. Most of the trades, if not all, were bearish. Seems like the stock market is not doing that well currently. And the last strategy is the pre-market strategy. This works more on futures indices like the ES and NQ. On this strategy, we need to mark the swing highs and swing lows of the current pre-market session right before the US session starts. So the US session starts at 9:30 a.m. on the Eastern Time. So we want to mark the maximum swing high of that day and the minimum swing low of that day. And when the US session opens, we wait for a breakout. The breakout should happen on the same day, and if it does not break out, we just cancel the orders and wait for the next day. And if it does break up to the upside, we apply the same theory as the previous strategies. We wait for a bullish retest and a bullish reactionary candle that bounces up from the breakout zone, and we buy long with stop loss below the recent lows. And take profit, you already know the setup planning, 1 to 2 or 1 to 3. And if the market breaks down the lows, we wait for a bearish retest of the breakdown. It should have a bearish reactionary candle. And on that moment, we look for a sell short when the candle closes, with the stop loss above the highs, and take profit in such a way to get a decent risk to reward, not too high but also not too small. This is the Nasdaq on the 1-minute time frame. This time I have changed the time zone on the chart to the New York time zone, so on this third strategy we want to mark the high of the pre-market. The pre-market starts here at 4:30, and we want to look for the pre-market high, which looks to be the same as the open candle. And now we want to look for the pre-market low. The pre-market ends at 9:30, which is when the US session opens. And that is right here. Now we wait for the candles to print towards the session open. Right here, we now look for the lowest price on this range, and turns out it's right this low that opened the session. We now wait for a breakout out of this range. And once again, we got the breakout to the downside. Now we wait for a retest, which is right here. And a rejection. Now sell short the candle close of the rejection. Stop loss above the recent high. Take profit at around 1 to 2 or 1 to 3. And this closed a couple minutes later. This was as well pretty close to hit the stop loss, but fortunately it did not happen. If I would place in them order from easiest to hardest, the previous day high and low would be the easiest and most effective one. Then it comes the 5-minute opening range, which also works well. And then lastly, the pre-market highs and lows. This one is still effective, but I've found, because it includes the pre-market, it's slightly harder, compared to the others, where it's more momentum-based. I go on much deeper detail on my trading program, where I also go in depth about how to build a sustainable trading approach for the long term. You got the link in the description if you're interested. I'll see you in the next video. Have a great trading week.